So you've probably heard a lot of opinions about whole life insurance. Some people swear by it. Others, they call it a waste of money. So who's right? Hi, I'm Joe Overfield, president of Intelliplan Financial, and we have helped countless clients in the Columbus area and beyond evaluate whether whole life insurance makes sense for their unique situation. And the answer, it's rarely black and white. So instead of asking, is whole life worth it? Try asking, what am I trying to accomplish? And is whole life the right tool for that job? Because when matched to the right situation, whole life insurance, it can be a powerful tool offering guaranteed growth, access to cash, and lifetime protection. But when it's mismatched, it can be expensive and unnecessary. So let's cut through the noise and take a more clear, unbiased look at how whole life works and when it might make sense for you. So let's dive in. What is whole life insurance and how does it work? Whole life insurance is a type of permanent life insurance that means it's designed to last your entire life, as long as you're paying those premiums. Now, that's different from term life insurance, which only covers you for a specific period, say like maybe 20 to 30 years. Once that term ends, so does your coverage. Now, whole life, it has two main parts. First, it has the death benefit, which pays your beneficiaries when you pass away, income tax free. And second is a cash value component, which is where whole life really stands apart. Now, let's talk about how does that cash value work. When you pay your premiums, part of it goes towards the death benefit and part covers the insurance company's costs, and the rest then goes into your cash value account. That cash value grows over time at guaranteed rates, and in some cases, you can even earn dividends depending upon the insurance company that you're working with. And here's the big advantage. You can access that cash value during your lifetime, often without any taxes or penalties, unlike taking money early from your 401k or IRA. But, and this is an important part, it takes time to build up. In the first few years, most of your premium goes towards the cost of insurance and commissions. So you want to think of this as a long-term strategy, not a short-term fix. So how do you decide between term and whole life? Well, think of it this way. You're trading something in either direction. Here's what whole life is going to give you. Lifetime coverage that never expires, guaranteed growth with no market risk, cash value that you can access without any penalties. There's a tax-free death benefit and tax-free advantaged growth. Potential dividends can also boost your cash value. But now here's what you give up. Whole life insurance has higher premiums than term insurance. It has lower returns when, say, you compare it to market-based investments. And it takes longer to build substantial cash value. It can be complex. It's not as simple as term coverage. Okay, there can be surrender charges, and there's a long-term commitment that is required. It's all about whether those trade-offs make sense for your specific goals. Now, let's talk about the elephant in the room, right? Cost. Whole life insurance is generally more expensive than term insurance, and premiums, they can be 5 to 15 times higher. That's because you're paying for lifelong coverage and the cash value component. However, whole life insurance costs can vary dramatically, and that's based on your age, your health, the death benefit amount, the policy structure, and also the insurance company that you're working with. While designing your policy, we take your entire financial position into account to help us determine the costs of your personalized policy to meet your needs. So don't just ask if you can afford the premium. Ask if those dollars create more value inside a whole life policy than they would somewhere else in your financial plan. That's where we come in to help you evaluate that trade-off. At Intelliplan Financial, we don't look at whole life in isolation. We look at how it fits inside your entire financial plan, alongside your retirement accounts, investments, tax planning, and also your estate goals. Our holistic approach, it's built around the bucket plan philosophy, which helps make sure every financial decision works together towards your goals. And as fiduciary advisors, we are legally and ethically bound to put your best interest first, not the insurance companies. So, whether you're considering a new policy, wondering if maybe you should keep the one you have, or maybe you just want an unbiased second opinion, we are here to help. Visit us at intelliplanfinancial.com and schedule your free 20-minute consultation to see whether whole life insurance is going to fit into your holistic financial plan. Again, I'm Joe Overfield, and thanks for watching. And remember, good planning today creates peace of mind for tomorrow. We'll see you next time.